Hey, can everybody hear me all right? Hey guys, so hope everybody's doing well. Looks like having a little issues with the email system here. I was wondering why nobody was responding to the webinar being sent out here. So apologies to those of you who may get in here later, view this later here. Again, guys, I'm a little under the weather. My girlfriend was sick all of last week, and I guess it's only was a matter of time before I caught whatever she had. So bear with me here. We'll still get through everything, but my voice might sound a little more strained, a little more coughing here. So hang in there with me, guys. So all right, guys. I really have nothing planned as always. You know, these are our open Q&A, and you know the markets definitely started to. So you guys can't hear me, all right? How's that, Magnus? Better? Is that better, guys? Okay, cool. So, guys, you know, listen, the markets, as we spoke about last week, you know, really sideways. Um, you know, just how things go. Finally, today, it looks like we're starting to see things break out a little bit more. You know, that's finally when I start to take more interest, you know, in wherever we are in the marketplace here. So that's really a good sign. You know, I really do expect that over the next, you know, week or 2 weeks, we probably will see some nice setups. We'll probably see a lot of good movement across the board here. So, you know, now's the time to kind of, you know, get more aware and just sort of, you know, focus in on, you know, the different areas you're watching on your chart. So if anybody wants to start with anything, you know, feel free. Any questions or anything you guys are watching. Absolutely, Mads. So Mads wants to look at the Australian yen here. So let's pull that up. And I also wanted to say a few of you have recently said to me that you're starting to see the light a little bit, doing a little bit better. Oh, wait, just be careful, Magnus. Make sure not to close that down. I think you might be under your admin because that'll close the chat for everybody. So just make sure to do that. Yeah, just do that on your other one. Yeah, no problem. Okay, so yeah, I just wanted to also say, guys, that a few of you said you're starting to finally see some progress, and you know, I just want to say that I love hearing about that. So you know, don't hesitate to send me an email when you're doing well, just as well when you're having trouble too. So all right, let's look at the Australian yen. So, Mads, is there anything in particular you're looking at here? I know a bunch of you played some of the USD yen and the Canadian yen had some bigger bars, bigger outside bars. I know Saw caught one, and the yen pair started to break out a little bit here. So, Mads, I'm not sure. Is there something you're looking at specifically here? Okay, so Mads said we have a pin bar on the daily chart, bearish outside bar on the 4-hour, but I took the trade on the daily. So I'm assuming, Mads, that you shorted this bearish outside, excuse me, this pin bar here. Is that correct? Now, the thing I'm going to say about that, and let me pull up the USD yen, and let me pull up the Canadian yen, because while your trade is moving along with both of these, because listen, they're heavily correlated. What I want you to be aware of. So here's an example where we have USD yen, Canadian yen, and over here is the Australian yen. So you know, a couple days ago we have big bearish outside bar Canadian yen, big bearish outside bar USD yen, and then small pin bar Australian yen. So you know, listen. The prices is probably going to move in, you know, together. So if the Canadian yen falls, Australian yen is going to fall. If the USD yen falls, you know, the Canadian yen, the Australian yen are going to fall with it. But the key for me here is, if you're looking at these charts, man, and you're going through, you want to look for the best one, because what I tend to see people do is they either take all of them, and they're either really happy at the end of the day or really upset at the end of the day. Or, you know, people might end up picking the wrong one here. So I'm not sure, Mad, was that something that you noticed that day? Were you observing a bunch of them? And was there a reason that you perhaps took this one over another one? Because at least what, you know, these were all had things against them too. So listen, I passed on both of these. Again, very good sized bars on both of these. The Canadian yen by far the biggest bar, and with the most space to work with. You know, again, there's other things here. We have, you know, this divergence as price sort of funnels higher here, and again, the USD yen, as I had explained to Saw on the forums, is really in a channel here, and we're sort of at the midpoint of really a larger boxed area too. So there were reasons for me to stay out. You know, again, the markets have been choppy, so I sort of like to see the market break out like it did today, and it gives me a little bit more confidence that people are sort of getting back involved. But you know, if I had to pick out of the three here, you know, I want to pick the one that really stands out at me the most, and that's really going to be either the USD yen or the Canadian yen. The USD yen, again, we have a pretty obvious area where price is likely to go, sort of the midpoint of this box again. And then the Canadian yen, if you can get under this sort of swing point here, which it did, and this area holds, it not only gives you space to say your first trouble area down here, right, but it's also going to give you an area to manage this trade. Whereas, again, I could do the same thing here, right? We could say, well, here's the left eye, right? We can enter on a break. But because it's such a tiny bar here, you know, any sort of move, you know, let's say price triggers and comes back up here and even test your left eye, even though the left eye held, even let's say it happens after you trigger into your trade here, you know, you're in a 50% drawdown. Whereas in the case like this, you have a very strong trade management area. So this sort of one, it becomes the most appealing one. So same thing with the USD yen, right? Because, you know, price might want to retrace to this previous swing. And, you know, if you enter here, it's not as big of a drawdown as this one, but this is sort of the second biggest drawdown, and then and then you have this one that gives you all that to work with there. So I just wanted to point that out because I wasn't sure if you had observed, you know, that. And another thing to really point out here is, you know, where is the confluence? So if I see this tiny pin bar and I see this swing point just under us, that is very difficult for me to want to sell back into. Now, again, like I said, this does not surprise me that this went down with the other yen pairs, but that's very tricky. That's something that, you know, yes, this time it's working out, but another time it may not. Okay, so now you also said on the 4 hour we had a bearish outside bar. So now this I like better. So if you played it on the 4 hour, Matt, I would actually like that a lot better than playing it on the daily. And that might seem weird, right? Because it's the same trade. So you'll say to yourself, well, but the pin bar on the daily is the same size as the 4 hour bar, and price is price. But if we now look at the 4 hour chart, you can really see how you can play this one with more confidence, and it makes more sense. So if we look here, guys, we had this nice strong uptrend, and you know, I believe last week we may have spoke about this area, how I said we were trending strong and price was starting to round off here, or somebody posted in the group, maybe even, it asked me about shorting, say, this bearish outside bar here. I believe that's what happened. Somebody asked in the beginner Q&A about, you know, Mike, what, can we short this bearish outside bar here? Here's divergence, and now we have a bearish outside bar and a swing high. And I said, you know, this bearish outside bar just doesn't jump out at you. You're not really sure, well, are sellers really excited about coming in? So I said that, listen, this area is good in terms of, okay, price is starting to round off a little bit, which is, you know, that fade in momentum here. We have this rising trend line, right? So if you got a bigger bearish outside bar, say closing underneath this short-term box here, that would give you a much stronger idea of what price is doing. So in this case here, you get a bigger bearish outside bar. Now, it's not enormous. It's not ideal to me. To me, I'd really want to see this bearish outside bar, you know, really close under here. So if I use this as the top of the box and you say this is the you know, the base of the box, down here is a little far, but even that makes more sense. That, again, that's that whole idea of making sure you're trading away from these support and resistance zones. But if we trade this on the 4 hour, and let's say you trade a break, well, again, there's that idea of that left eye, right? So price should really only have to retrace at most back to here. Because if this area doesn't hold, guys, the times that price comes above here and then shoots down really do not outweigh the times price is going to come above your bar and shoot back down. So if this is the true selling here, well, you know, people are going to get their last little sells in on the retrace here, and then they're going to commit here. So although it's the same on the daily, essentially, I think you miss that information of that little box. So when you look at it in the daily, right, you just see this slight left eye here, just based on how it trended up. But you don't really see the significance of this area. So does that make sense, Matt? Where if you look on the 4 hour, that left eye, which is, again, same thing on the daily, right? That's the 4 hour view. That's the daily view. It's the same. Price doesn't change, but you can see how price staggered here and created this very tight box. So when price gets under this area, you know, this top becomes a very strong support and resistance area, which is very different than you just having a left eye. So on the daily, we can't really tell that that's a tight box. It just looks like it's a left eye. It just looks like that's the high of yesterday's bar, the bar prior to the pin bar. But on the 4 hour, it breaks it down better. So, man, I would really rather see you trade this from the 4 hour. Now, again, it's the same idea, but I think it's going to, I think it makes a lot of difference because the next time you see a small pin bar on the daily chart, you might apply the same idea of, oh, well, if that left eye holds, okay, here's a strong uptrend, but whatever, I'll short it. And then you're just really trading a small pin bar against a strong uptrend. So that's where people get into trouble. So this is the one that'll work out for you. And then next time, this same looking situation, it looks similar to you, will not work out. And that's where you get in that sort of, you're chasing your tail. And that's where a lot of break-even traders are at, is that they miss this. So this one works, then the next one doesn't, and they kind of go, well, which one should I take it? Should I not take it? Or, for example, they skip this one mad, right? And it works out, and then the next one comes up, and they take the next one, and the next one's a loss. So that's one of the most common things I probably hear, from you guys, just in general, those of you trying to learn. So I would just view it like that. Again, I think the best one was the Canadian yen. I know Saw took this one. Again, just terms of sheer size. Again, the markets were still sideways, so I wasn't all too convinced about getting involved. We can see that fade in momentum, right? Every time we make a new high, price rejects down. I would be worried about this swing point. So, that's a little nerve-wracking for me. If this bearish outside bar, guys, closed, really under here, then to me it's sort of a home run trade to here. So really, after this second day, even that was a little suspect for me. It's a little tricky. That's a tricky situation. The good thing is if you took this and price broke down, say that first day, your stop's going to go above the high here. I can't imagine leaving your stop, let's say you start with your stop here, guys. I can't imagine you leaving your stop there, not moving it down to, say, the current bar high, right? Because, look, this tested even above the furthest point to the left here. So it should not have to come above here again. I mean, if it does, it's just going to make for a really uncomfortable trade, and those are just not worth it. You're just those will drive you crazy. And you really want to see, I think, a high momentum play in this scenario, especially trading back into that swing point. So again, I think it was a little tricky with the markets being sideways, but by far I like this one the best. I know, again, a bunch of you took the USD yen too, which absolutely shot down today, which is great. I'm sort of watching this for a potential channel breakout now. So I'm looking for this as a breakout type play. Or, listen, we could look at it as a box play. We could get bullish price action here as well. Again, I just want to explain why I sort of avoided this one, guys. So, again, knowing the markets have been sideways, right? So, whenever we see a big move like this, we sort of always like to backtrack and go, oh, well, this bearish outside bar did it. I should have taken that one, which is okay to do, but also dangerous to do. So, you want to be careful with that thought process. You want to be a little bit more, I guess, critical of when you view the charts like that. So what I basically was looking at was we're essentially in a larger box here, right? So that's started by these two boundaries. Now, again, this box price could come to here, shoot up to here, or it could just be non-existent. But we're consolidating here, and as well in the middle we're consolidating. So we can see that. We can see price boxing here, price boxing here. That's how I start to build those boxes on my chart. Understand the consolidation we're in. So really, remember, the midpoint of your boxes are price pivot zones, right? So knowing that, well, that already makes this bearish outside bar a little suspicious for me, because I go, well, listen, I could be trading just back into the midpoint of this zone here. But then I said, okay, let's examine this a little bit more. And when you do that, you can really see now you're in another channel. And it's a very clear channel at this point, right? But again, that represents another form of consolidation. So you take that channel and you draw a line through the midpoint. And once again, that midpoint here is also a price pivot zone. So now we sort of have intersecting price pivot zones. So this area is tricky. This is one of those places where, if it doesn't go like this, it doesn't drop down, and price starts bouncing around, I'm telling you, it's one of those times where price will come right back up on you, and you're left scratching your head. So, in a case like this, I think this sort of high momentum that happened here is sort of critical to the success if you're going to trade an area like this. So, you know, again, it worked out real nice, and now we're sort of sitting on that bottom box here. So I'm going to be watching this area for potential breakout or really longs here too. So I'll sort of have my eye on the 4 hour going into the next session here, but could definitely have a move. But you know, trouble is close. So if you're going to short, you know, even if we get a good breakout here, you know, you got to be aware. You know, we're coming right into the 100 big round number. It's not far away, and as well as the base of the pattern here. So some nice moves here. I think it's good. I think it's a good sign for the markets to get moving here. So does that make sense to everybody? Any questions on that? Okay, great guys. So what else are you guys looking at, or any trades you guys have taken? Again, I know FX has been a little bit slow, so I sort of kind of hope that you guys have not been trading as much. You know, that's sort of always a good sign to me. Okay, Ellen wants to take a look at the pound Canadian. So actually, that's another pair that's been on my watch list for a while. So let's check that out. So Ellen, I'll give you my overview, and then I'd love to hear what you're looking at here. So once again, guys, you know, we're essentially in a bigger box, right? So this box really looks the same as the USD yen, right? So we sort of have one area of it formed well, which is this top resistance. And then we have the start of the bottom of the area, right? We have this resistance turns to support. And then the way you sort of know, and you can see a bigger box building. So let me ask you guys. So what's an easy way to start to pick out the fact that you might be in a larger consolidation? Because people always say, well, Mike, hindsight is easier to find that box, but I want to be able to see it in real time. Well, you can do both. And it's both equally as important, where sometimes, listen, you're going to wait for that box to be well formed, but by knowing that you could be in a box will give you a heads up on how to trade that area or avoid that area. So I did say it on the USD yen, but let's see if you guys can apply it here. How did I start? And I started picking this one out, I believe last week I showed you guys the same thing, where I said, listen, you know, we were over here. I said, we're in a bigger box here. Let's sort of watch these two areas. But how do I know that really? It's sort of one of the basic concepts when you apply boxing. It's one of those first things that James really teaches about boxing. Well, right. So we have a top and a bottom, which is correct. But what goes on in the middle that will allow you to see that it's sort of a larger box? It really does happen all the time. And I'll show you guys another one too. So, right. So Agadan said a price pivot zone, which is correct. But what is that price pivot zone made up of? So again, we can run now, and we can do it. Let's run an area right through the middle, and we can see a price pivot zone. But what's created within that price pivot zone? Boxing, smaller boxes, right? So you guys see how price boxes on top of box on top of box. So when you start to have a couple of these occurring, well, that's creating that larger box. It sort of has to do that, right? So here's a box, right? Price breaks out, box is here, box is back on top of the first box, and that's the start. It's sort of, it's like building blocks on top of each other, and that's sort of the start of this larger box. So you can almost think of these as like rooms, right, within inside your bigger house or your bigger room, something like. So that's just a good way though to be able to spot the type of market you're in, because now it might not be really a good idea to say trade within this box or this little box, but when you see a bigger box, you might say, well, if price comes down to the larger boundaries of that larger box, it's going to be easier to trade off of than trying to trade within these messes. So that's a way that I avoid trading in too consolidated a market, because it's not that I don't trade consolidated markets. People always get confused because, they'll catch me on a streak of, right now, for example, a lot of markets are consolidating. So it wouldn't surprise me if in the next month I end up having a lot of breakout type trades. But when the markets are consolidating like this, if we have a proper consolidation that makes sense to me, I'm very willing to trade within these areas. You know, if price trickles down to the 1.8 and gives us, you know, a nice big pin bar off this area, well, okay, I know I'm trading and I'll trade it back into this box. But I'm not going to do that, say, when we're, you know, in a tighter consolidation like this. That's not as attractive to me. So it's sort of, you know, we can trade these consolidations, but you need to be aware of them. For example, and then I'll come back to this, Australia, New Zealand, same thing. It's the same thing. Now, this box is a lot nicer. So I'm going to go back to the pound Canadian and explain a little bit more about that box. This is a very clear defined box, right? Resistance is very clear. Support is beautiful. Price pivot zone in the middle is picture perfect. And then what are we surrounded by? Well, just boxes, mini boxes, mini boxes, mini boxes, right? So, I mean, this is, I don't really see how you can get more information from support and resistance than what we have here. Than really sort of 3 lines here. So this is one of those ideal boxes to me. It's just picture perfect. Whereas now, if we go back to the pound Canadian, we have those same characteristics, right, of the smaller boxes. We see our midpoint, we see our boundaries, but notice that the top of this box is, you know, a lot more jagged, right? It's not really perfect, right? The bottom right now is perfect. Resistance turns to support, right? So this is sort of a perfect area, right? Whereas the top is a little bit more jagged, and that sort of gives price that look of, oh, it looks like we're kind of turning over here. So it sort of becomes less interesting to play as a box play, right? For me to trade it within consolidation as it is to sort of observe these failures maybe a little bit more. And then maybe say, well, I'm kind of interested in seeing, well, either how we test the 1.8, that becomes the most interesting area to me, or if we break higher here, what occurs on, say, another failure? Because every time price makes a new high here, we're sort of failing here. So that's how I sort of, you know, I see we're in consolidation, but then I sort of redefine what is that consolidation made up of. So I did that with the USD yen, right? I did that with the pound Canadian. I did that with the Australian, New Zealand. They all exhibit boxing. They all exhibit consolidation. But notice how each one is different. You know, the USD yen has a bigger box, right? But within that box, we have a flag pattern. So let's just go back real quick, right? So here's our bigger box that's starting to set up, but within that bigger box we have another pattern here, right? So it's sort of a channel of a flag pattern of sorts, right? So we have that. We have the Australian, New Zealand, right? That's just sort of perfect boxing, right? Okay, great. Different than the USD yen. Then we have the pound Canadian, which is also boxing, but it's a little bit different. It's more of a rounded box up top. So these things are crucial to me to know, you know, how am I going to approach the situation? Because you can't just, what I see people do is they'll find boxes, and then they'll just sort of start drawing boxes everywhere, right? And they'll have boxes, okay, right? We can see price consolidating, we can see price consolidating, but they try to trade every one of these exactly the same, no matter how much space is in them, no matter if the tops and bottoms aren't perfect. And that to me doesn't make sense. That's like trying to trade every trend line the same way. Well, you have really accurate trend lines, and you have trend lines that are steeper, or trend lines that are you know, prices more jagged through it. So you, in my opinion, you need to be very careful. So when you observe these areas, and then say, well, what else is going on, and then how best to approach that area. So that's literally exactly what I do when I'm looking at these areas. For, you know, pound USD, same thing, right? So pound USD is also boxing on top of boxes on top of boxes, but we're within this bigger channel here. So how can I use these areas? How can I smartly use these areas? Am I looking to really trade the box here? No, you know, when price was coming down here, I was looking for if we could break out here and then use this box, which is the midpoint of this box, you know, as support and resistance to look for a breakout trade. So that's what I'm doing when I'm going through my charts, when I'm looking at these consolidated areas that are everywhere right now. Your chart is littered with them, but they're not all the same. You can't approach them all the same, at least in my opinion. So, Ellen, I totally cut you off, though. So, Ellen, I'm not sure what you're looking at exactly. I just wanted to sort of go over that because it's very similar. Again, and Saul was asking about the Euro Australian, right? So, remember I went over this one last week, guys, right? Same thing. We had that all that boxing going on. We had this perfect price pivot zone. But again, it's a different situation where, okay, there's a head and shoulders within that box. So let's look for a breakout here. And, you know, just being able to define a box is great, but take it a step further, right? And try to find what's more to that story as well, because it will be different. And you know, that's why we can't sort of be robots about it. Okay, so Ellen said I'm thinking short. So, yeah, I mean, we're definitely at a crucial area here, right? So we know that. Midpoint of the box. So, you know, listen, it could be just retracing here to the underside of this box and then fall down. But, you know, again, you know, Ellen does trade a little different when she touch trades. So, you know, she's a little bit more, you know, I'd say perfect with her zones, her lines to trade off of here. But, you know, these middle points can be very tricky here. So, you know, again, I'm more conservative, so I'd be looking towards the 1.8 is sort of the most interesting right now. And really any test of this area. You know, we could see just another attempt up here, maybe a big bar, big failure bar. You know, some other things to look out for is, you know, just see how we squeeze down. Maybe we'll get another pattern within here too. So, but this is definitely a chart that gets my attention because it's there is order to the disorder here, right? There is, although price is just choppy, right? A lot of people will be like, oh, the pound Canadian is just choppy. But there's order to it. There's stuff going on. It just, to me, it just hasn't tipped its hand yet of what it really wants to do. Now, that doesn't mean, guys, that price can't drop straight down tomorrow or shoot straight up. That's the irrelevant part to me that I think some people worry about. That, again, that sort of reminds me of the, you know, USD yen, sort of, where, you know, this huge move, I did not expect it, right? The markets have been choppy. I did not expect this to happen, but it's only a matter of time before this happens. And I believe I said that yesterday on the forums, I think, or something, where I said it's really only a matter of time before we do see these big moves. Because when the markets are consolidated, even markets that don't have price patterns and they're just choppy, eventually you do see a huge move. I think it was the USD. Yeah, somebody asked about the USD Singapore dollar, right? And, you know, there was this bearish outside bar here, followed by an inside bar, or almost an inside bar, and then boom, price shoots down. Well, listen, price can do that even if the market's choppy. It's only a matter of time. Look, at this thing is so consolidated. It's a matter of time before we do break out. But what I'm interested in is when we break out, you know, are we near an important area that's going to make sense for why we should break out too? So when we do break out like this and there's nothing for me to do, that just means the markets are moving to me. That just means people are getting involved. We're sort of ready for some volatility, and that's going to create opportunities as well. Whether it's opportunities that exist now, right, in terms of, all right, well, you know, this market's still consolidated, the markets are moving. You know, if we start to see some good price action here, I'm more interested in it because the markets are volatile, as opposed to, you know, when we're on the USD yen, and again, it was still a good bearish outside bar, but I'm more wary about it because I know the markets are choppy. So again, it's sort of that I want to be proven that people are active, and I also want the setup to be on my chart too, not just, oh, here was a huge move, let me backtrack how I could have got into it. That's that dangerous line of thinking. And again, we've all done it. You know, anybody who studied price action's done it, because that's sort of one of the easiest starting places is, oh, there was a big move. How could I have gotten into that move? So let me just backtrack that, and then the next time I see that, I'll do that. And that's, again, that's a good way to study your charts, but that will not really get you there because there's more to it than that. All right, so any questions on that? That was a lot about boxing, but I also got a few emails because I went over boxing last week, obviously, because we work so consolidated, and I did get 2 emails of people who said that they really did not see boxing more than it was just price consolidating. So, you know, hopefully those of you that see this again next week too get a little bit more information on that. All right, Barenka said, Mike, getting back to the pound Canadian, do you think it really opens up below the 1.81 100 level? So here's the 1.8 100 is just a little bit above. Do you mean the 1.8 level? I'm assuming you probably meant that, the 1.8, right, Barenka? Yeah. So yeah, it does. I mean, listen, there's not a whole lot happened on this pair, right? So for a long time, I mean, this thing's just trending up, 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 up. Now we're finally boxing off substantially. We boxed off, minor boxes here, shorter term boxes, shorter term boxes. So what Barank is saying is, well, let's say we get down under 1.8. Does that really open us up for, say, a large move? The answer is yes and no. I mean, just because price consolidates, okay, let's say it does something like this, and then we break out, well, it doesn't mean, okay, there's nothing here. It's just, okay, what does that mean? I'm going to place that in terms of, well, here's a box, right? I use, say, the length of the box to give me an idea. Okay, well, that'll probably take us to this last larger box. So that's what I would sort of do. Now, I would love to see that personally. So, that is because of space and a breakout. So I would really love to see us come down here, bounce off the 1.8, maybe test the midpoint again, and get a bearish outside bar. Or get price to break down and pull back to this area. But that doesn't mean I'll just say, okay, now we should, just because price trended up, we'll equally trend down. We want to still use the information in the short term, which would be, here's a tiny box, right? Here's a larger box. Those are still a piece of information I'm going to use. This box lines up with the 1.75 big round number. This is the length of this box will get us, sort of projected to that 1.75. So that's when you want to start to still find other pieces of information that could be useful in the trade management aspect. So those pieces of information aren't necessarily what I would trade off of, right? So you might have a minor price pivot zone or a minor box like this or this. But that information becomes important to me when I manage my trade, because you do want to find areas to sort of key in on, and know what to do. And likewise, same thing could be said for the top, right? If we get above this box, we could definitely see it hold as support too. So we can't just assume, and this is another thing people assume when they start to learn space and traffic, which is, to me, the thing that changed my trading the most was being able to observe space and traffic and how price reacted. And one of the things that I made too, assumptions I made early on that was wrong, was, well, okay, if we trade a breakout where there's nothing here, right? So, well, maybe we'll go, let's look at the weekly time frame. Oh, there's still nothing here. Let's look at the monthly time frame. Oh, well, okay, there's, nothing all over here. That should get us to here if we break out of here. That's too far off now. Now I think we're just jumping the gun. So what I do in a situation like this is still similar. And I say, well, listen, where are major areas? Well, we got the big round number here, 1.9. We have this box, and, if you study price patterns, in a sideways box, price likes to go, roughly the size of that box from top to bottom. That brings us roughly to the big round number. That's a good type of target. That's a good area to try to get my trade to. But, a lot of people will say, oh, price breaks out of here. Let me just hold for that next run up that looks like this. That's the hindsight part. That's the part we would love to do. And maybe it will run like that, but you still got to be smart about it, right? I'm not going to let it get to 1.9 and then, maybe let's say it was a bullish outside bar or a pin bar off that area and have my stop down here and just leave my stop down there and see that all eroded, right? That's a large move. And again, it depends on your risk, your tolerance, what you do. If I'm risking 3% of trade and we get a move from, here to here, that's a substantial move. And it's not worth it. Now, maybe I might decide I'll go to break even and see if we can just continue to run higher. But you still want to do smart things. You want to protect yourself, your stop, reduce them at logical points. If you get stopped out because you moved your stop at a logical point, let's go back to Canadian yen. So, let's say you took this one, right? And, price is testing this area and, price breaks a little bit here. It bounces, nothing substantial, and you move your stop from, say, here to above the current bar high, which reduces, what is that, 65, 70% of your risk, right? And then price, say, today came up, stopped you out, and dropped down. That's okay. Those are the things that people worry about, but I'd much rather be in that position, because taking those small losses, right, and then you hit those runs where you don't miss and you get 6, 7, 8 winners in a row and you catch that runner and you take profit quickly. for me, I found far outweighs the times of just sitting there and hoping and leaving my stop here and seeing price do this, right, and stopping me out, or maybe coming back down. You know, that's far outweighed by reducing your risk at this point here. So, you know, that's that same thing goes for, you know, pound Canadian. You know, it would be nice to say, oh, let's just, you know, buy over here and hold for the next, you know, whatever that is, you know, thousands of pips to run to the upside. But then you get stopped out and you take your 2-3% loss, and that's horrible. You know, that's the thing that you got to find the balance for. And again, it will be different. You guys will have different trade management styles and you know, and tolerances, and that's part of exploring the type of trader you are. But you know, it did bring up a good point about understanding space on a breakout is not just because, you know, you don't just look down here and see all that and say, oh well, we got nothing. You know, likewise, even worse, you don't look out here and go, oh, we got nothing, so there's nothing that's going to stop price. No, we try to figure out what are the things that are logical for traders to look at. You know, they are big round numbers, right? They are the previous length of a pattern. You know, those are logical things. This is what people are watching out there, and it is as simple as that. But it also doesn't mean that, you know, if price goes the distance to the big round number, that price has to stop there. It's just a logical point for us as traders to say, how do I want to use that information? And again, I've just done this so long now that I know what fits into my style of, you know, that's a great target. You know, or at worst, I'm not taking a loss if price gets up to that point. There's no way in heck I would do that. And those are the decisions we have to make. And again, you know, that was another question I got asked today on the public forum about, you know, how I held my Kellogg's trade so long. Because, oh, we did hit a major area. Well, listen, I had to make decisions as a trader to say, you know, we're at a major trouble area, but I believe this bar has the power to continue to move us higher. Well, that didn't mean I left risk on the table. I still was at break even. Along the way, I still locked in profit. So we don't have to be black and white with things either. We do, as traders, get to control our risk in different ways. And that's the beauty of trading, that no other anything I know, again, real estate would probably be the only other thing based on what James tells me all the time. And, you know, he's talked to me in more detail about how he approaches his real estate. There's very few businesses that I know where you can put your money in and control sort of what you do with it. You get to sort of dictate, okay, I don't want to be any more, or I only want to be enough to this point, or I choose not to enter any trade for the next 6 months because nothing appeals to me. There's not a lot of things that you can do that, right? Some people would say, well, you know, poker, right? You can only play the best hands. I'll play premium hands. Well, we're still playing with, you know, an edge that's very different than trading, because trading, you can watch thousands of charts and time frames, and you know, you're not involved in the same poker hand that has the same amount of cards each time with the same amount of outcomes based on how many cards are out and what's on the table, right? So if you sit there and choose to only play pocket aces every time, well, people will find out you're playing only pocket aces and steamroll you. Whereas in trading, nobody cares that I'm only playing that pin bar in Kellogg's. Let's say it was my only trade for the month. Nobody cares about that. That's a ridiculous thing when you think about it. That's a really great thing that only, in my opinion, I know that trading allows. Again, James will say that real estate's very similar to him as well. So, you know, but I don't know about that, so I don't want to comment about that. But again, think about that, guys, when you approach your trades, and again, what you do with your trades too, which is just as important. All right, let me catch up on some comments. Again, a few of you coming in late here. Again, I think email system's a little messed up. So some of you might be getting in a little bit late because of that. I'm a little under the weather, so excuse my voice here. I'm struggling a little bit. All right, so Baranka said, I didn't know that the next box could equal the size of the previous box. I don't remember seeing that. Yeah, so one of the most common technical analysis things for breakout trades, whether really sort of any pattern. So let's say you have, you know, let's go to the USD-yen. So if you're looking at, for example, you know, a breakout of this channel. You know, if you don't have anything to go on, what a lot of people do is they'll measure the length of the pattern, right? And they'll just add that to where the breakout occurs. So, you know, roughly that's a good projection point for your breakout pattern. Now, that also does not mean that every pattern will get to its full projection, right? So if I get a breakout here, right, I'm not going to ignore the trouble areas, which are also here and here. I'll just use those three pieces of information, as well as, okay, here's a big round number, is the 100 big round numbers down here as well, and put all those pieces of information together and use that and say, how can I best now manage my trade going forward, right? I don't like the idea. I never did well if I said, let's just take the breakout and I'll set my target here and I'll come back win or lose. Because I feel like if you that can work. Don't get me wrong. There's people that do that and that can work. But I feel like you're giving up so much of your ability of the other information of your chart to make even more logical decisions, right? So why give up that other information too? I just take it all together and put it together and say, well, what's the best course of action here, right? So if we go back to the pound Canadian, right, and let's say eventually we get that breakout here, right? Let's say price bounces, comes up here, and we say, all right, let's get that measured projection out, right, which is, will look something like this, right? We say, okay, well, that lines up with the 1.75, which is over here, which I didn't draw, which lines up with the top of this box. So that's a good type of final target if I can get there. But that doesn't mean on the way we won't have hiccups, or we don't have other information that we should use. So that doesn't mean I'm going to ignore the fact that there's a support and resistance flip here at the 1.8. So, let's say we got, guys, a bearish outside bar that looks something like this. Well, okay, I'm not going to let price get above this area, right? That's my trade management area. That's how I'm going to short into that area. It doesn't mean I'm going to ignore this area here, which would be the midpoint, right, of a potential another box forming under this box. So these are all pieces of information I want to use. It's that I want to use that and say, well, at the time, what's sort of the best course of action by having all this information at hand. So I have all this great information, and now I want to figure out what's the best way to use all those pieces of information. So that's why I always tell people your entry and your trade management or your exit are really identical things. And that's something, once I figured that out, that aspect out, it changed my outlook on everything. Because I realized my start to finish is all the same thing. It's just taking pieces of information and blending them together. But how I find an entry really has everything to do with how I find my exits as well too. And again, that I think is just a matter of confidence in the concepts, right? You just get really good at understanding the things, the tools that you use, and then all of a sudden, that was sort of one of the last light bulbs I've personally had in a long time, was that understanding that concept, right? Because I get 10, 15 emails a month of people saying, I stumbled onto the James 16 group, or people in the group, right, or random people, and they say, if I just knew how to exit, Mike, I could be a profitable trader. How do you exit your trades? And I go, well, this is going to be a little long-winded, and it's probably not the answer you want to hear, but the reality is everything sort of blends into one. And, you have to get there, right? You got to understand, like V just said, I found that taking some profit at the first trouble area helps him. Small profits add up. These are revelations and conclusions that you're all going to come to your own in some different way. And that's great and fantastic. And that's exactly what I want you guys to do. But for me, the biggest, sort of last light bulb I can really remember having is going, it's all the same thing. How you exit and how you enter and everything in between is all the same thing, because it's all based on the same information. It's just that people put emphasis on different things when you're, in my opinion, when you're struggling or you struggle with different areas. So the final result is always when we close our trade, right? Which is what really counts. So people always go, oh, well, that's why exits are the hardest thing to deal with, right? I remember that when I got into trading, I used to think that too. And then I remember just reading that everywhere. Everywhere things were, exits are the hardest thing. And those of you who are real old school and the thread's still there. We saved it. But, listen, I was just like you guys. I joined James 16 group to try to get better at my trading and the things that I knew. And I was very heavily focused on exits. And the first thread I ever created, and it was just to help other people out, because I made a lot of progress on my own, was called My Exit Strategy Thread. And it got a lot of exposure because it was a different way that people had viewed their charts, and I would show my stuff in real time so people could see how I would do it. And I was so fixated on exits too, because I spent a lot of time looking at entries and saying, oh, pin bars are good for this reason, outside bars are good for this reason, space does this. I'm missing that last piece of the exits, and I started as being very sort of mechanical with my exits because it's the only way I could sort of wrap my head around the concept of exits. Then over time, I got better at reading my charts, which meant I got better at reading my entries. But that in turn meant I got better at reading my exits really because I said when this entry occurs, I sort of have a good idea of how the exit's going to work, right? Because if I apply, and in that thread it was about my 2-bar stop method, right? If I apply my 2-bar exit strategy to this type of entry, it has the best chance of working out. Well, eventually that just led me to understand that really that's just the same thing as understanding what my chart's telling me. So then I understood, well, if I could do that, I also knew to avoid using my 2-bar exit strategy on certain entries because it didn't work well, right? A basic example is, in a consolidated market, trying to use a trailing stop doesn't make sense. It does not make sense. You will get stopped out way too many times for a very small profit or for a small loss or a larger loss or break even than when you have space. So, but I eventually learned, well, listen, I see this. I know it works well. So instead of avoiding it, just apply the situation to my exit and okay, I'll take profit quicker, right? And that just sort of was a snowball for me. And it just was like pushing it downhill and gaining momentum for me. And I just realized it's all the same thing. And I know that sounds sort of, might be hard for some people to relate to because, again, that's just how I came to a lot of conclusions. But that was my sort of biggest light bulb moment. And then really after that, everything just fell into place in, all aspects of my trading. But, I don't regret doing things one way for a while because I learned so much. I learned, and that's what I did with all my trading. I sort of, sectioned it off. Breakout trades, intraday trades, trades with a lot of space, trades and consolidation. And I, sort of, I guess, compartmentalized each of those aspects of my trading. And then what I had at the end of the day was, here's a bunch of different ways to approach and view the market. And I got really good at viewing the market in different ways and observing my chart. So it's really the same thing, right? It's the same thing as you guys opening your chart and observing how price reacts at a first trouble area. Or, there's a pin bar on your chart and you decide to trade it. Bad or good, you learn something from it. It's all the same thing, but in my mind, that's what I was doing. And I didn't really realize it till later, looking back on it, which is obviously, I guess, what always happens, right? You look back and you can make sense of things better, but that's really essentially what I was doing. So, maybe this I'm a little sick here, so maybe I'm having a little bit of a Rain Man moment, but that's really for me was sort of what just really changed everything for me is when I realized that it's all the same thing and that I stopped fixating on anything other than being logical with my chart. And again, you have to get confidence in the material, right? You have to get confidence in yourself and things that you're good at, but it's repetition. I even look at Ellen, who trades, again, Ellen trades touch trades. You guys all know Jaru's method, and there's so many intersecting things that we all do, which is great, but it's still a very different thing. And I've seen Ellen go from, not really understanding what it is she's trying to do to now understanding very strongly why she does the things she does, right? Just as I do the way I do things, because she spent so much time and repetition seeing the same types of things happening. And this situation, this works best. In that situation, this works best. And you just sort of keep applying that over and over again. And then all of a sudden you go, oh, I have a method. Here's my method. There's not a guidebook that goes do 1, 2, 3, 4, 5, and there's your trading method. I've never seen that. I've never in, I guess it's 13 years now or 12 years, however long I've been doing this, have seen that out there. So, I think for a lot of you that are struggling maybe a little bit, realize that that part of it comes, right? That consistency comes with time and understanding the different tools you're using. And again, I see a bunch of you recently have been contacting me and saying you're doing better, and seeing the light in different ways, and that's really cool. And you'll probably be thinking very similar along those lines when you get comfortable with what you're doing. All right, so that's my rant. I didn't even think I had it in me to rant today. I'm so wiped out, but I guess I always do. All right, guys. So, what else? Any questions about any of that? Anything we just spoke about a lot on the charts too. I know for some of you, depending on what skill level you're at, some of this is too heavy, and for some of you it's repetition as well too. But hopefully that just gives you confidence when you see it over and over again. But any questions on any of this, guys? Please don't be afraid to speak up. Absolutely, Ellen. Oh, I'm not. Believe me, Ellen. I am not. But it's very nice of you to say, but I'm not. I think what I've always been, Ellen, is, and anybody in my family or friends will tell you, I get very, in a way, sort of obsessive about whatever it is I'm into. So, whether it was sports when I was younger, or, there was a time when I loved magic when I was a kid. I loved it. And, I'm like an 11-year-old kid reading magic that was for these advanced people, or when it was poker when I was in college. I get very whatever into whatever it is, so I just sort of question it and go over it over and over again, and try to figure it out. But I'm really not. I didn't do well in school. I was never really good at school. It wasn't my thing. Reading a book wasn't my thing. So really, I'm as far from brilliant as anybody. And I think a lot of people who find trading, who find poker, who find those different things interesting have very similar mindsets. Again, not everybody. There's so many different types of people, but that's what I really think. I think people, their minds sort of work a little differently, so that's why these things interest them. Because I can talk about this to some people and they don't care at all. It doesn't make any sense. They can't even wrap their head around a little bit of it. But those who want to sort of dig deeper into it, right, and are not looking for a quick fix of, I want to get rich tomorrow, I want to learn this in a day, a week. I think we have different mindsets. I do. I truly believe we probably approach things very similar. Again, not completely the same. That's why we have different types of traders and people. But definitely not a brilliant person. I think I get a little into something and I gotta conquer it. It's sort of, trading for me was I had to conquer it. I don't get off of things easy until I figure it out. It's sort of I think that's a good thing and a bad thing. Sometimes my mind works, that helps me out, but other times, maybe dwelling on things that don't need it as well too. But I never dwelled on school. Yeah, that's the funny thing. Um, Definitely that's not my environment. I never thrived in academia. And then the funny thing is, both my brothers are, my older brother's Harvard Law. Both went to Dartmouth College. My younger brother just got into MIT MBA program. Like geniuses. And then there's me. But we have similar characteristics in some things, and then completely different mind. The way our minds work are different in a lot of aspects too, which is really kind of funny too when you look at it. And again, I'm the middle child, so that's probably why, right? Yeah, man, a lot of people play poker. I met a lot of you guys. That's all I used to play was poker, and I think it's a natural progression for a lot of people too. It's very similar. I still will say that to this day. Poker is very similar to trading. I think just trading is way better. You get a way better edge, way more. You can scale way better in trading, way better in trading. Yeah, yeah. I think the same thing, Troy. I think poker is harder when I look back on it now. I played when the games were so weak, when it was so really new to the internet. I'm still good. If I go to Atlantic City or Vegas and I play at a table and it's a lower limit, 1-2, 2-4, no limit, that to me is really easy. Those people just have no idea for the most part. These are like one or two good people, but to play at the high levels, forget it. I think the edge is so thin at those levels that I'm so glad that trading exists. Yeah, absolutely. I started to see at the end of when I started to tail off from poker. I used to play a lot of Omaha, and sort of some of the other more random games at the time. People would go play Omaha, high low and stuff like that, and really have no idea about value in those games. So that's why I felt the best at towards the end to actually make money. Whereas poker, forget it. You're playing just Texas Hold'em. It's just, oh my God, you just got to grind for so long. It's almost the worst at this point. It made me sort of not like the game anymore. But now I enjoy it. I enjoy playing more now than I did towards the end. But again, the approach is the same of how you have to approach money management and how you have to approach how you play the table and you play your cards and doing logical things. Again, there's different aspects to it, but trading is very, very similar on so many levels. The psychological side of poker, I think, helped me the most. And you have a bad hand, you take a bad beat, you got to move on. The next trade has to have nothing to do with that previous trade. Same thing with poker, previous hand. Those things are identical. They're really essentially identical. But yeah, I think trading is harder to learn, but easier in the long run, and way, way better in terms of your edge. Your edge is, the difference is incredible. Yeah, I hope so too, Alan. I think that'd be a lot of fun. It's going to be legal pretty much everywhere in the U.S. in not too long, I think. That'd be fun if we can get some, tables going online and stuff. I think we should have some James 16 buy-ins and stuff like that, tournaments. Even maybe, we could do cash buy-ins. We can do, different fun things. I think that'd be a blast once we get that going. Yeah, guys, we're all done here. I think we'll wrap this one up. I'm pretty shot, so hopefully I don't get too sick here. Whatever my girlfriend had, I think it's coming on, but hopefully not. So as always, guys, it's still a blast for me. Still, hope you guys learned a bunch here, and any questions, just let me know, guys. Thanks, guys. Have a great week. You too.